Hello everyone, welcome to this session analyzing transactions, accounting transactions. So as you know about the accounting equation, asset equals liability and equity, recall that from last session, when we increase an asset, we have three choices to make in order to keep the fundamental accounting equation in balance. So if we increase an asset, we must either increase a liability, increase equity, or decrease an asset. Let's take a look at the first transaction. Cash of 25,000 is invested in Kiki company by investors in exchange from common stock. So 25,000 cash comes in exchange for common stock. We will increase in assets, cash part. We will also increase in equity account, common stock. 25,000 increase in assets, 25,000 increase in equity. Notice that the big red bold numbers at the bottom, this ensures that after each transactions that our assets equal liability plus equity and they should be balanced. Now let's take a look at the second transaction. Purchased office equipment for 70,000 in cash, which accounts are involved: office equipment, which is an asset, and cash, which is also an asset. One of these assets will increase, the other will decrease. We will have office equipment increased by 70,000 and cash decreased by 70,000. Again, notice that the fundamental accounting equation is in balance. Our third transactions, purchase supplies for 7,500 on credit. Now the company is not paying cash, but instead they are paying on credit, so their debt or obligation will increase. That is a liability, and the account that we are utilizing is accounts payable. We will have an assets account, supplies increase by 7,500, and we will also have a liability account, accounts payable increased by 7,500 again. So notice our fundamental accounting equation is in balance. Transaction number 4, paid 3,000 in cash to creditors. Whenever you see paid, I want you to put in your mind that cash will go down. Asset, cash will increase, and the amount owned to creditors will also decrease. We will decrease an assets and also decrease a liability. Again, our fundamental accounting equation is in balance. That's very important. So our fifth transactions, performed services for 4,700 in cash. Whenever you see performed services, I want you to think revenue. In this transaction, the company earned a revenue and service cash. We are going to have an asset cash increase. We will also have equity increase. We call that revenue increase as equity. So we will increase cash by 4,700 and increase revenue by 4,700 again. Our fundamental accounting equation is in balance. So the next transaction, number 6, performed services for 3,500 on accounts. Again, performed services revenue, but instead of getting cash, the company gets it on account. Instead of increasing cash, a different asset called account receivable will be increased. We will increase an assets accounts receivable by 3,500 and we will increase a revenue account which is under equity for 3,500. For our fundamental accounting equation, again in balance. Transaction number 7, paid 2,100 for rent expense. Whenever you see paid, I want you to think cash. Cash again going down. It's going to affect asset cash, and it will also affect equity expenses. So we call that expenses decreases equity. We call that expenses decrease equity, and we will decrease an assets account and decrease an equity account by 2,100. The next one, transaction number 8, received 1,500 in cash from credit client. The two accounts involved are going to be cash. Cash will go up from credit client, and it's going to affect two assets account, cash and account receivable. Cash will go up by 1,500 and accounts receivable will go down by 1,500. The next transactions, number 9, paid 2,250 for salaries and wages. Again paid. That assets account called cash will decrease, and an equity account will also decrease through expenses. Notice that the assets equals liability and equity for fundamental accounting equation holds. Then finally, transaction number 10, the company paid 1,000 dividend to stockholders. Paid. So cash, which is an asset, will decrease, and dividends, which is part of equity, will decrease. Dividends decrease equity. We have an assets account decreasing and an equity account decreasing. At the end of the day, our assets equal our liabilities plus equity. Our fundamental accounting equation is in balance and holds. Thank you so much for joining me in this session number 4. So now you are going to get the opportunity to do activity like this to make sure you are understanding holds. I look forward for next session where we will be talking about the debit and credit rules with regards the same the T accounts for the same transactions. Okay, don't forget to subscribe my channel. I recommend my channel to your friends.